Welcome, my friend. By popular demand, I'm doing a two-part series on the VWAP indicator. VWAP stands for Volume Weighted Average Price. It is a benchmark that can be very useful in your trading. And what it essentially means is that it is adding up the dollars traded for every transaction multiplied by the number of shares traded. So it's incorporating volume. You can use this in place of moving averages. It's commonly used in place of moving averages. And the way that I look at it is kind of a fair value. So what we have here on this particular chart, the way that I have it lined up here, this black line, that's actually the volume weighted average price. So by incorporating volume into it, you can see that it's not only an average of price, but again, the energy, the volume, the weight of the price action. And so I consider it kind of a neutral zone. That is the neutral zone. That's why I use the term the fair value, although that's not how it's technically defined, but to me it kind of makes sense, fair value. So when the market comes back to that line, as it does here, then that is kind of a neutral zone. Oops, we'll do it that way. And kind of equivalent, in other words, it's not the same, but it has the similar concept to me of a pivot point, or the central pivot, if you like to use floor trader pivots, where that would be a balancing point. And anything below that would be bearish, anything above it would be bullish. So the same thing here. You could consider it in that same sort of context, that same sort of concept. Anything above it, bullish. Anything below it, bearish. Now, let me bring up the indicator and show you how I've got it set up on my charts. I know everybody likes to see that, as well you should. So here's how I've got it set up, and depending on the charting platform you use, there may be different parameters here and so forth that you use. But anyway, I'll just show you mine. So this is NinjaTrader, and blah, blah, blah. Okay, so now, as you'll notice, I have NinjaTrader. A lot of people don't use this for some reason. I'm actually very surprised by this. But a lot of people don't use the standard deviations above and below it. They just use the line itself. And let me pull this up. So here actually you can see the definition. VWAP's the ratio of the value traded to total volume traded over a particular time horizon, usually 1 day. Measure of the average price of a stock traded at over the trading horizon. Okay, so there's your little definition for you. And so I've got 3 standard deviations here. 1, 2, and 3 are the multipliers. Put whatever colors you want in there and so forth. Okay, we'll talk about this more in part 2. Actually, we'll talk about it a little bit in part 1 as well. So in part 1 here, in part 1 we're going to talk mostly about trend trading. So as you can see, it's going to form these lines because I've got the 3 standard deviations. The black line, that is our actual volume weighted average price. So again, that is kind of our line in the sand, if you will, between a bull and bear market using this indicator. So cool, we start out above it. By the way, notice that the lines always start out together. And that just makes sense because it's going to be recalculated at the beginning of every day. So it's really important, by the way, as a technical issue, that you have it loaded before the market starts every day. Have your charts live. It's not quite as accurate typically if you put it on later, like if you come in the afternoon and then you load it up. Best to have it loaded up right at the open, ready to go, because it does calculate on every bar, and it's a cumulative calculation. So at the beginning, all your lines are going to be very close together. Well, actually, they're going to start all together. And then you're going to get this expansion typically at the very beginning. So one way of trading this, if you're looking for a trend trade, is to look for the VWAP to be going up and price to be above it, and retrace to it, hold above, and then continue up. Now, what I really like to see, for me, the best case scenario is for it to stay in the standard deviation range here, just like it does right now. So to me, that is a nothing but net trend, so to say, to use a basketball analogy. And because why? It's not coming back to the volume weighted average price. If it does, it's coming back to neutral. All of a sudden, the market's going back to a neutral sentiment. And if you want a continuous trend, well, you don't want it to come back to neutral. Then you kind of lost your trending. Now, some people still do that and use it as a support level or resistance for bearish markets. And that's okay. If you use other things along with it, candlestick patterns, some indicators you like or whatever, it can be used that way as well. I'm just saying that for me and my house, when we're looking for a sustainable trend, I feel much more confident if it stays between these standard deviations up here. Does it do that all the time? Oh, heck no. Why? Because, well, not every day does the market go into a sustainable trend. So that's like your textbook best example. And I like to start out there just so you have that in mind. But let's look at real life. Okay? So a lot of trading days are going to be like this. But this is valuable to know as well. Because now, what do we have? So now we have a flat VWAP line, right? It's just flat. And so and then also we have price bars above it, below it, above, below. So that again indicates a non-trending market. That the market's just hovering around the same value weighted average price, and therefore we don't have a trending market. Well, guess what? That's good to know as well. Would I trade that? No, I probably wouldn't trade it. But I would see that and say, oh, hey, one of the most valuable things in trading is to know when not to trade. Not just when to trade. Also, you should learn when not to trade, to stay out of choppy markets. That's extremely valuable. And so, well, this is Amazon 5-minute chart. So then what? Just go look at a different market. Find one that is trending. So again, whether you want to do scanning or just you have your basket of stocks that you're looking at, this would be a great example of one to say, oh, okay, you know what? Nothing's happening here. I think that maybe I'll just go look at a different market and find one that is trending. Very valuable. Now, here's one more example, and what I wanted to demonstrate on this is kind of a combination of the two things that we looked at before. So here, out of the day, we come out of the open and we go down and we retrace. Now here, look, we retrace not all the way back to the VWAP line. And this actually is even better because it's showing that we haven't gone back to neutral. We're staying in bearish territory. And so this is a place where we could short, use a good timing indicator, candlestick patterns, whatever, in conjunction with this. You never use this or any other one tool or indication alone. But this is a great way to kind of map the market to know where we are as far as bullish, bearish sentiment. So it's held this. Now, look at this. Okay, it goes down a little bit. Very cool. So far looking good if we went short there. But then what happens? Well, then we just go sideways for quite a while. And that is quite a while. I mean, golly, that's almost, what, 2 hours? Pretty close to 2 hours. And so this is where things can get very disconcerting, where you can get very uncomfortable because you think, oh, the market's just going sideways. And of course, you're right, it is going sideways. However, we are still in bearish territory. Still in bearish territory. Therefore, if you have taken that short, I might want to take some profits, lock some profits in there, adjust your risk profile, and do your money management technique. But the fact is that if we're going to break out, we're looking to break out down, and things have not reversed. In other words, just because the market's going sideways, we are not in a bullish market here. We are still in a bearish market. So if it fits the rest of your trading style and you want to hang in with some shares there and then go and see if you can get more out of it, then this definitely worked out well for you. We got a beautiful candlestick pattern, and then boom, in the afternoon, last 2 hours of the trading day, the thing just tanks for the last hour and a half or so. And so this can help you to stay patient and let your winners run, fulfilling the famous saying, cut your losses short and let your winners run. Another way of not getting freaked out during neutral parts of market action and still having a, I hate to use the word bias, but an established sentiment based on a logic and a rule-based method. So we're going to have part 2 after this. Part 2 will be very different. Part 2, we're not going to talk about trend trading. Today was about trend trading the VWAP. Part 2 is, well, I'm going to leave that up to a mystery. That'll be coming out next week. So As a special offer to my YouTube subscribers, by the way, I'm going to give you one of my favorite trade strategies that will go into much more detail than I go on to with any of my YouTube videos. This trade strategy is called the Rubberband Trade. I'm going to give you all the rules. It's going to take about 26 short minutes to give you all the rules for it. The Rubberband Trade is a fantastic trade. I still take to the day. It has a very, very high win-loss ratio, and you can get it absolutely free by clicking on the image in the top right corner of this video or in the description below the video. And by the way, if you're not watching on YouTube, then there's probably a link below or an opt-in form on the side. And once you do that, I'll personally email the video to you with the Rubberband Trade strategy.